Microsoft stock is trading at about $268 with a market cap of about $2 trillion. In the past 12 months, they made about $192 billion of revenue, which represents a price to sales of about 10, which is not too expensive. At the same time, their net income is about 72 billion, which represents a price to earnings of about 30, which is again slightly expensive. Microsoft has three revenue segments: Office, Personal Computing, and Cloud. Cloud is the most interesting business at the moment. The cloud revenue is growing at more than 25% year on year and generates 70% gross margins. Microsoft is an extremely profitable company. Their free cash flow margins are in the order of 35%. They use this free cash flow to offer their dividend of 0.92% and do some stock buybacks and preserve some cash to acquire some good companies. When we look into their outstanding share count for the past few years, we can see that they're actively buying back their shares. We see 1% reduction in outstanding stocks each year, which is a good sign for the investors. Recently, Microsoft announced the acquisition of Activision Blizzard, but we have to see if the acquisition will go through in 2023. So for now, I'm not considering anything related to Activision Blizzard. In the past few years, if you look into their growth, they are growing in the teens. And analysts are projecting that Microsoft will grow its revenue by about 13.7% in the next 4 years to make about $333 billion of revenue in 2026. In my opinion, this is very reasonable. So for my 2026 prediction, I'm going to use the same revenue of $333 billion of revenue. I'm going to assume a net profit margin of 35%. The net income in 2026 will be about $116 billion. For a company that is growing in the teens and has a free cash flow margin of about 35%, I'm willing to pay a multiple of 25, but for conservatism, I'm going to assume 22.5 multiple. So with this multiple of 22.5, the 2026 market cap would be about $2.65 billion, which translates into a $350 stock price. But wait, the stock is already $270, right? So that represents close to 32% growth in 4 years. Adding their 0.9% dividend each year, we're looking at a performance on par with the indexes like SPY or VOO, which doesn't look very attractive. But I'm still willing to buy this stock at this price because I have confidence that this can beat the index because of the following 3 reasons. The first reason is Microsoft is acquiring companies in gaming sector and healthcare, which can boost their revenue and net income, thereby the share price. Number 2 is their cloud is currently growing at about 25 to 29%, but it has a lot more room to grow. So I'm assuming in the next few years, it's going to grow even faster. The third reason is Microsoft has a lot of cash in hand. So I'm assuming that they're going to buy back more and more shares in the coming 4 years, which can benefit the shareholders.